Now let's head to Egypt, where inflation has risen to a three-decade high, piling pressure on the government to introduce price controls on vital products as it implements sensitive economic reforms. Now, inflation has been accelerating since it floated its currency in November, allowing it to roughly halve in value. The floating of the currency was part of the conditions to access a $12 billion budgetary assistance from the International Monetary Fund. And according to Egypt's statistics agency CAPMES, annual urban inflation rose to about 31.5% in April from 30.9% in March. That was the highest since June 30th, 1986, when it reached 35.1%. Now, rising prices present a challenge for President Abdel Fattah el-Sisi and his government, which of course has pledged to push ahead with sensitive austerity measures like fuel and electricity price hikes. Well, let's get more on this. Yasser Hakim now joins us in Cairo with an update. Yasser, as always, welcome to the show. Now, as we heard there, inflation at a three-decade high. How is the government responding to this? And of course, what could this mean for its subsidy cuts, which are expected in July?
Yes, one of the main reasons why this inflation is skyrocketing is because Egypt imports around 80% of its needs. And when they floated the Egyptian pound, they were hoping that by time it will improve as they hoped the exports would increase because the value of the Egyptian pound has decreased. But the exports are not yet up to standard and the revenue is not good enough to strengthen the Egyptian pound. So at this point, the quick fix, if you can call it, is stopping imports, trying to reduce the amount of imports that Egypt has been doing. That's by increasing, more than doubling the tariffs on any imports and stopping actually what they call the luxury goods, the import of luxury goods, to restrain this influx of products out of Egypt and keep it to the basics. And this would mean you save money, you save dollars, you save hard currency, and therefore you try to control prices. At the same time, the government is also working on producing its own products and its subsidized products by the state-owned companies and also the outlets to sell at reasonable prices to help push down the prices from the private sector and try to sort of put some, if you can call it, to bring in a lot of products into the market to stabilize the prices against the private sector. Now, this has not yet achieved the results the government wants to achieve, but it's hoping it can do so in the next few weeks, while also improving the atmosphere for production to increase, for exports to increase in the next few months. But that will take some time.
Now, like you mentioned, Yasser, this did come as a surprise to both the IMF and Egypt's government. It wasn't expected, certainly. We know that right now an IMF delegation is in Cairo. They're reviewing Egypt's progress in terms of reforms. How do you think this will impact the second dispersal of that $12 billion loan agreement? Do you think it's going to affect it at all?
Of course, it's been the main highlight, the main issue of the visit of the IMF team here in Cairo. And what we're hearing, nothing came out which is any official response, but we hear from the sources that in spite of Egypt not being able to really go as fast as the IMF wants concerning economic reforms at this point, but the reaction from the IMF is positive, that it's willing to go ahead with the Egyptian timetable. Egypt is slowing down a bit its reforms because of the effects it has on the social side, especially when you cut subsidies. It will mean more price hikes, and the government does not want to take that step so quickly. You said July is the date. Yes, July is the time for cutting subsidies, but the government says maybe this July it will not take that step concerning the oil subsidies and electricity. So one of them will not take effect. It will not go into effect. We expect that the oil subsidies will remain as it is. Electricity might increase a bit, but oil prices will not increase because this will mean an increase of all products in Egypt. So the IMF is taking on the Egyptian plan for now, And I think the second batch will go ahead by the IMF for the IMF loan, and waiting to see what will happen.
But Yasser, what exactly has been the public's response to this? Moody's ratings agency pointed to the fact that public dissent will probably be one of the greatest risks to the country going forward. So how are people reacting to this news that inflation continues to rise?
Now, the government has been adopting a very vigilant and strong media campaign to explain that these austerity measures should have taken place years ago, maybe decades ago. And because the previous governments have not taken the steps, this government had to take the step now before it's too late and the country can get bankrupt. So it's a necessity. It has to be done. It's painful, but it's good on the medium and long term. And the Egyptians, although it's painful for the Egyptians, we don't see any unrest. We don't see public backlash. Yes, there is anger. There is a lot of burden on the Egyptians, but there is hope, and they are waiting to see if there will be improvement in the next few months. At this point, it is hard. We're going into the holy month of Ramadan, which Egyptians know that prices usually increase at that time, and the government is promising that the next couple of weeks there will not be an increase in prices, and it will take steps to avoid an increase in prices. If this actually happens and we see a stability at this point, this will be a positive return that maybe Egyptians can wait and be patient a bit for more improvements. But it is an uneasy situation for the government, and it's a very sensitive issue, and it's trying to balance the act by taking the austerity measures a bit slower than last year, and at the same time trying to increase the social side, social welfare projects to help even make up for the losses by the Egyptians concerning the higher prices at this point.
Well, many thanks for those insights, Yasser. Of course, Yasser Hakim joining us there in Cairo.